You are watching Market Watch, the brief overview of the key events from the world of finance. In the first 13 years of this century, the key U.S. stock index S&P 500 twice collapsed by more than 40% from its maximum mark, forming a wide sideways. Over the next 12 years, which have not yet ended, this index has grown by more than 3.5 times. Based on these data, we can assume that we are inside the largest bubble in the financial markets. Given the still high inflation, it is difficult to disagree with this. Another factor indicating a bloated market is that the significant increase in capitalization of the S&P 500 is a technology sector that, as in the early noughties, grew without creating real value. However, let's try to look at this situation from the other side. Technologies are developing rapidly now, significantly overtaking all other industries. But at the same time, it is technology that strengthens industry and other sectors of the economy. Artificial intelligence, like the internet at one time, enter with incredible speed into all spheres of human activity, adding value. Therefore, the growth rates of key stock indexes have increased and may continue to grow. Moreover, we are still at the very beginning of the development of artificial intelligence, and therefore at the beginning of a long-term upward curve. Although this is an extremely optimistic scenario, it is still not unreasonable. And now let's move on to commodity assets. Copper and a number of other industrial metals remain the focus of attention, as they are actively used in the production of high-tech chips and other elements of modern production. Gold is also at the peak of popularity, including due to the growing demand for protective assets. As the stock market grows, the need for risk hedging also increases. Continuing to develop the topic of risks, it is impossible to ignore the oil market, which remains in a difficult situation. On the one hand, the moderate cooling in the Middle East reduces the hype, and on the other hand, the prospect of global economic growth keeps sellers from more powerful sales. And in conclusion, let's talk about the cryptocurrency market, which continues to strengthen amid expectations of Ethereum ETF approval. A positive decision by the U.S. Securities and Exchange Commission may become a fairly strong bullish fundamental factor for the cryptocurrency market. One should not expect comparable growth from the moment of approval of applications for Bitcoin ETFs. Nevertheless, the approval of the Ethereum ETF application may provide the necessary support for Ethereum to update the historical maximum and further growth. Otherwise, we will see sales again, but their strength will depend on the conditions of refusal for the exchange-traded investment fund for the second largest cryptocurrency. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.